Hello, everyone. Welcome to the market opening bell on Wednesday, July 16th, your 10-minute guide to the stock market. China's Q2 economic growth exceeded expectations, and Hong Kong stocks rose, driven by technology shares. The Hang Seng Index opened 78 points higher, dipped 61 points to a low of 24,141 in early trading, then rebounded to close at the day's high of 24,590, up 386 points or 1.6%. The Hang Seng China Enterprises Index rose 144 points or 1.7% to 8,877, while the Hang Seng Tech Index gained 147 points or 2.8%, closing at 5,431. Total market turnover was 288.4 billion Hong Kong dollars. Southbound funds recorded a net purchase of $3.824 billion in Hong Kong stocks, including net buys Meituan totaling 646 million, CSPC Pharmaceutical 177 million, Kuaishou 149 million, net sales Tencent totaling 830 million, Xiaomi 525 million, SMIC 181 million. According to statistics, southbound funds have net bought Meituan for 7 consecutive days, totaling $6 billion, while net selling Xiaomi for 4 consecutive days, totaling $1.707 billion, and Tencent for 4 consecutive days, totaling $1.82 billion. Technically, the Hang Seng Index has finally broken through 24,500. If it stabilizes above this level, the next target could be this year's high of 24,874. In the Asia market, the three major indexes showed mixed performance. The Shanghai Composite Index was soft but reclaimed 3,500, while the Chinex Index rose over 1%. The Shanghai Composite fell 14 points or 0.4% to 3,505, and the Shenzhen Component Index rose 60 points or 0.6% to 10,744. Combined turnover in Shanghai and Shenzhen was 1.6119 trillion yuan, up 153.2 billion yuan from the previous day. The renminbi central parity rate fell for 2 consecutive days to 7.1498 against the US dollar, down 7 pips from the prior trading day. The National Bureau of Statistics announced that China's Q2 GDP grew 5.2% year-on-year, surpassing market expectations of 5.1% and 1.1% quarter-on-quarter. Q1 growth was 5.4%. Among the three carriages data, industrial value-added growth exceeded expectations, while retail sales and fixed asset investment fell short. June retail sales grew 4.8% year-on-year, below the expected 5.3%. In the first half of the year, fixed asset investment grew 2.8%, below the expected 3.6%. Real estate development investment fell 11.2% year-on-year, slightly worse than the expected 10.9%, with residential investment down 10.4%. New commercial housing sales area fell 3.5% year-on-year, with residential sales area down 3.7%. New commercial housing sales value dropped 5.5%, with residential sales value down 5.2%. In June, industrial value added grew 6.8% year-on-year, above the expected 5.6% and 0.5% month-on-month. The urban unemployment rate was 5%, in line with expectations. Following Li Ning's Q2 operational update on Monday, Anta Sports also released its Q2 performance. Anta brand retail sales recorded low single-digit positive growth compared to Q2 through to 4. Phillip brand retail sales saw mid-single-digit growth, while other brands achieved 50 to 55% retail sales growth. PopMart issued a profit alert, expecting revenue for the 6 months ending June 30 to 2025 to grow by at least 200% year-on-year, and profit to increase by at least 350%. This is driven by increased global recognition of the PopMart brand and its IPs, diversified product categories boosting revenue, sustained high growth across all regional markets, and a rising share of overseas revenue. Changes in revenue structure positively impacted gross and net profits, while economies of scale significantly boosted profits. Additionally, optimized product costs and enhanced expense controls improved profitability. The US June CPI data showed both month-on-month and year-on-year inflation accelerating, dampening market expectations for Federal Reserve rate cuts. Mixed bank earnings and rising US Treasury yields, 10-year yields reaching 4.5% and 30-year yields surpassing 5%, the highest since May, pressured market sentiment, leading to declines in the Dow and S&P 500. However, driven by a strong rebound in Nvidia, the Nasdaq hit the new historical high. The Dow fell 436 points, nearly 1%, closing at 44,023. The S&P 500 dropped 24 points or 0.4% to 6,243. The Nasdaq rose 37 points or 0.2% to 20,677, marking its second consecutive day at a record closing high. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, surged 206 points or 2.8% to 7,697. Nvidia was notified by the US government that its H20 chip will receive export approval. Reports indicate Nvidia plans to launch a new chip, RTX Pro, for the Chinese market, fully compliant with regulations. Its stock rose 4% to $172.33, closing above $170 for the first time, with a market cap exceeding 4.17 trillion US dollars. AMD stated it received US Commerce Department approval to resume exports of its MI308 AI chips to China. The company previously estimated export restrictions would cause an $800 million US dollar loss. Its stock surged 6.4%, nearing its 2024 high. Microsoft, Alphabet, and Apple also gained over 1%. Citigroup rose 1.1% after reporting a 25% increase in Q2 net profit to 4.02 billion US dollars, with earnings per share of $1.96, surpassing expectations of $1.6. Revenue grew 8% to $21.67 billion, beating estimates of $20.98 billion. Citigroup now forecasts full-year revenue at $84 billion, the high end of its prior guidance. JP Morgan Chase fell 1.6% despite strong Q2 trading revenue. Overall revenue dropped 10% to 45.68 billion US dollars, and profit fell 17% to 14.9 billion dollars. Wells Fargo reported a 12% rise in Q2 net profit to 5.49 billion US dollars, with adjusted earnings per share of $1.54, above the expected $1.41. However, it lowered its full-year net interest income forecast to roughly flat at $47.7 billion, compared to earlier guidance of 1 to 3% growth, leading to a nearly 2% stock decline. The US June CPI annual inflation rate accelerated for the second consecutive month to 2.7%, the highest since February, above the expected 2.6% and May's 2.4%. Core annual inflation rose from 2.8% to 2.9%, below the expected 3%. Month-on-month CPI rose 0.3%, the largest increase in 5 months, compared to May's 0.1%. Core CPI rose 0.2%, below the expected 0.3% and up from May's 0.1%. Our stock pick today is Zoomlion Heavy Industry, stock code 1157. Zoomlion Heavy Industry is actively promoting industrial structure optimization, accelerating the coordinated integration of traditional advantaged industries and emerging industries. The group's three traditional advantaged product lines, concrete machinery, engineering cranes, and construction cranes, maintain a solid domestic market position, while its overseas business scale and market presence continue to grow. In terms of earth movers, the group has rapidly completed its product range for ultra-large and micro excavators, achieving full coverage of 1.5 to 400-ton product types, forming a comprehensive product matrix. Key performance metrics of its products lead the industry, demonstrating strong market competitiveness. In the domestic market, focusing on deep development in mining scenarios, ultra-large mining excavators have seen explosive growth, with market share for excavators above 100 tons ranking among the top three in the industry. In overseas markets, by integrating advantages in R&D, supply chain, and channels, the group has successfully deepened penetration in advantaged markets and achieved breakthroughs in emerging markets, establishing a dual growth development pattern and further enhancing the brand's international influence. In the field of aerial machinery, the group holds a top market share for small and medium-sized customers in the domestic market, with a 90% penetration rate for motorized products, making it the most comprehensive aerial equipment manufacturer in China by model range. Through continuous technological innovation, the group has built core competitiveness, establishing a brand advantage characterized by higher-end, safe, and reliable products. Its boom lift products with super high walk heights and key technologies have reached international leading levels, with the launch of an 82-meter straight boom lifts, setting a new global height record, and a 95-meter aerial work truck, setting a new domestic height record for such vehicles. Long boom products have achieved large-scale exports to Europe, the Americas, and the Asia Pacific, realizing both economies of scale and brand premium enhancement. In the field of agricultural machinery, the group adheres to a strategy of large investment, major transformation, strategic layout, and significant development, continuously increasing R&D investment, fully advancing product upgrades and standardization, and accelerating the transformation to intelligent manufacturing. This has led to comprehensive improvements in production and efficiency, with products becoming fully high-end, intelligent, and green. Dryers maintain the top position in the domestic industry. Wheat harvesters hold the second position, and tractors have seen significant growth in both scale and profit. Newly upgraded corn harvesters, seeding machines, sugar cane harvesters, and rice harvesters have completed comprehensive performance and quality enhancements, entering trial production and market launch, injecting sustained growth momentum into agricultural machinery development. In the field of emerging business, Zoomlion New Materials, led by technological innovation, continues to increase R&D investment and steadfastly promotes cost reduction and efficiency enhancement. Multiple initiatives have achieved breakthrough developments in brick product technology and categories. Recommended buy price 6 Hong Kong dollars, target price $6.6, stop loss $5.7. I do not hold the aforementioned stock.